Welcome back. Mixed markets this morning. Take a look at futures indicating a mixed opening. NASDAQ this morning is soaring with these AI tech stocks leading the market as they are year to date. However, the worry is around the debt ceiling negotiations. We are told that they are making progress. However, Fitch Ratings has put the United States on notice, saying that the dispute over the debt ceiling is putting our AAA rating on negative watch. Joining me right now is the Fitz-Gerald Group principal, Keith Fitz-Gerald. Keith, great to see you. Got to talk to you about the NASDAQ this morning and this move in Nvidia in a second. But first, give us your reaction to the debt ceiling issue and how important that is to investors right now.
I got to be really blunt. This is a disgusting abuse of the American public's trust. It is political buffoonery of the highest order, and I think investors are right to be concerned. The downgrading of our debt and our dollars is a significant risk to global markets, not just our economy.
Yeah, okay, let's talk about what is going on with the NASDAQ right now and Nvidia. Nvidia is soaring. It is up 25%. It's set to add hundreds of billions of dollars to the NASDAQ when it opens for trading. It's going to beat Apple's single-day market value gain by reaching $1 trillion in market cap. The chip maker reported a double beat on earnings and revenue last night after the bell. It raised its outlook on demand for chips used in AI applications. You like this stock, right, Keith?
I do. People thought I was out on a limb somewhere or out to lunch when I said buy it in the low 100s, and it's about tripled from there. So we're very fortunate to get one right. And here's the thing. The big data is not going away. It may be the largest single investing trend in human history because it's going to change the world. The stock is just getting started, even though we've had a big run. Might be smart to take a little bit off the table, but I hope I'm smart enough to buy more.
Wow, just getting started. Mark Tepper, jump in here. I mean, AI is driving this entire market.
It is. And Keith, I want to get your take on whether or not you think this AI rally may be getting a little bit ahead of itself. Because when I look at all the best performing companies year to date, specifically those companies that are up 30+% so far this year, it's very AI dominant, right? It seemed like last earnings season, if you mentioned AI in your earnings call, your stock went up. If you failed to mention it, your stock went down. And if we were to strip AI out of the S&P is probably down 7% this year rather than up 7%. Do you think this rally has gotten ahead of itself? Do you think it needs a breather, or do you think it has more room to run?
That's a very sophisticated question and a good one, the right one. I think, yes, it's probably gotten a little ahead of itself technically, but the longer term trend, when in doubt, zoom out. We've created 90+% of all the data in history, Mark. And so here's the thing, is that's been created within the last couple years. As AI begins to move, we're going to see that trickle into other industries. So yes, it's narrowing. Yes, I'm concerned technically, but longer term, it doesn't change my view. That genie is not going back in the bottle.
So you would trim it here to try to get back in at a better level, or what's the strategy if you own Nvidia right now?
Well, I think for the average investor, I think you want to hold on to your core positions. If you're a trader, you want to take some off the top, maybe lighten up, put into some of those names that Mark has just talked about that are great companies that are getting left behind, because that's how you do it. You buy low, you sell high. The market is like water. It's going to flow to where it's treated best. Right now, that's AI.
Well, what about the Fed? The May meeting minutes came out last night. They revealed that Fed officials were divided over additional rate hikes to lower this inflation. Keith, the next meeting is in June. Do you expect a pause or a hike?
Well, two words on that one, about time. They've destroyed, $70-90 trillion worth of wealth worldwide. They're still as wrong as they were when they were working with transitory. So, yes, I think they're probably going to go ahead and hike. I think that that's what they know how to do. That's all they know how to do. But I'm pleased to see that they're finally acknowledging some cracks in the armor. Yeah,
but you know what? We've already seen the impact of 10 rate hikes. Cheryl, we're going to get the GDP out this morning. Growth has come way down from where it was.
Exactly. We're going to get our second reading of GDP. But, what's interesting, Keith, about the Fed itself is that, we definitely saw with regards to the minutes that a lot more questions about their strategy moving forward. What is the tip of the scales to take any type of quarter point hike completely off for June, in your opinion, for the Fed?
Well, these are the kind of things that you don't want to talk about. You have to think about in my capacity as an investment strategist. I think that some sort of colossal crash related to the debt ceiling would certainly do it, because then they'd feel like they have to ride to the rescue. I think that data that would present them with an opportunity that is too headline driven to ignore would do it. I think that maybe Powell sees the light and acknowledges that he's wrong. But none of those things are probable. They're just possible, Cheryl.
All right. We will leave it there. Keith, good to see you. Thanks so much.
Thank you.
Hi, it's Keith here.
Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.